Markets have had their nervous moments, but finished the quarter close to their highs. The gains have been good, driven largely on hopes that interest rates around the world will not be lifted further, and in certain places may even now be cut. Returns for UK investors have been boosted by the 3% fall in the value of the pound. Many companies held in the portfolio have significant revenues from outside of the UK, so the weaker sterling means these foreign earnings become more valuable. While some of the portfolio's fund performances have been very strong, the factors lifting the markets in general are from one-off events and will require economic growth to hold up to sustain further gains in profits. Well, in some ways, we're entering the worst-case scenario for the UK economy. As is so often the case in investing, uncertainty is a real problem. Businesses cannot commit to long-term capital investment projects, and we're seeing this in the economic numbers. Brexit has been formally delayed until October now, and it's possible this date could be pushed back even further. Well, for a long time, we've had less exposure to the UK market than we might normally have. And this focus on international businesses has benefited from the weakness in sterling. And this has lifted the value of the portfolios. Well, from an economic standpoint, the trade war is unhelpful, but it's not disastrously so. It does seem to be having an impact on global trade flows, but there may be other causes behind this. More worrying is the impact that the trade war is having on some of the larger listed companies, particularly in America. At the beginning of the year, analysts were hoping for 8, 9 or even 10% growth in profits this year. These have really been pulled right back in, and now expectations are that profits growth will be minimal this year. That's not good news. I'm afraid that most low-risk investments will provide very little in the way of returns. Investors in Europe are actually paying to hold bonds issued by the French and German governments. Elsewhere, once you adjust for inflation, low-risk investments are priced to lose money over the foreseeable future. That includes, I'm afraid, money held in cash deposits, including those at the Building Society. Well, you can mix a basket of low-risk investments in an attempt to spread the risks, and this should provide a modest uplift in returns. Today, investors must be prepared to take some exposure to risky assets, such as shares, to give you any chance to make returns ahead of inflation.